Okay, so we're going to deep dive into something that feels like a financial earthquake
Yeah.
that kind of hit this Monday morning, April 6th, 2025.
Yeah. Yeah.
Across Asia,
Really
the
does.
markets just absolutely buckled.
Oh, yeah.
We're talking about Japan's Nikkei and Topics indices.
Right.
They didn't just dip their toes, they plunged over 7 and nearly 8% respectively.
The 10.
South Korea's Kospi took a 5% hammering,
Yeah.
and Australia's index wasn't far behind, down a substantial 6%.
Right.
So if you're keeping an eye on your investments or even just the general economic landscape,
Right.
this kind of synchronized drop probably has you wondering what in the world is going on.
Absolutely. It's
Yeah.
what's immediately striking is the sheer force and the interconnectedness of this reaction.
Right.
These aren't isolated tremors. We're looking at major economies in the region
Right.
experiencing significant and simultaneous downturns.
Yeah.
It's also casting a long shadow over the upcoming opening of the New York Stock Exchange,
Well-
which is widely expected to start in negative territory.
Yeah.
Adding to this sense of unease is the drop in U.S. oil prices below $60 a barrel,
Wow.
a level we haven't seen since April 2021.
Yeah.
So this confluence of events
Right.
really points to a significant wave of concern
Right.
washing through the global financial system.
Yeah, and if we want to rewind to what sparked all of this, it really seems to point back to Friday, April 4th.
Right.
Donald Trump enacted a new set of tariffs, and as we've seen in the past, China did not hesitate to respond.
Yeah.
They announced a comprehensive 34% tariff on all goods coming from the United States,
Oh, wow.
set to take effect on April 10th.
Okay.
So it feels like we're witnessing a trade dispute escalate into a full-blown trade war in real time.
Really does. Yeah. And it's
Yeah.
it's reminiscent of a playground squabble.
Yeah.
It quickly spirals out of control.
Mm.
One side takes their ball home, the other retaliates by destroying the sandbox.
Right.
Ultimately, everyone suffers, and the situation just deteriorates rapidly.
Uh,
The sharp market downturn we saw across Asia this morning really underscores the severity of this escalation.
It really does.
It really does.
And it's really interesting to me to hear how President Trump is framing these tariffs.
Right.
He's using this analogy of medicine,
Okay.
suggesting that sometimes you need to implement tough measures to address underlying issues.
Interesting.
But when you consider the potential for trillions of dollars to be erased from the stock market,
Right.
it's hard to see this as a mild remedy.
Yeah.
It feels more akin to a drastic intervention with some significant potential side effects.
Mhm.
He's also expressed confidence that these trade deficits will just disappear as a result, and he's
Oh, yeah.
even asserted that world leaders are dying to make a deal with him.
Yeah.
And I think it's fair to wonder about the true nature of these interactions behind closed doors.
Sure.
Are they genuinely eager negotiations driven by mutual benefit, or are they perhaps more strained conversations aimed at mitigating the damage from these tariffs?
Yeah. It really makes you think about the potential divergence between the stated objectives of these policies and their actual on-the-ground impact.
Yeah.
While the stated goal might be to rectify trade imbalances, the immediate and negative market response indicates a significant level of anxiety about the potential for widespread economic disruption.
Right.
So the assertion that world leaders are dying to make a deal
Yeah.
might very well reflect a desire to find ways to lessen the adverse effects of these tariffs on their own economies,
Right.
rather than a genuine endorsement of the tariff-based approach itself.
Right.
And this raises an important question about the intended and unintended consequences of wielding such economic tools.
Yeah, and if we focus on China's reaction specifically,
Sure.
this sweeping 34% tariff on absolutely everything coming from the U.S. set to kick in on April 10th, that's a really decisive move. And as we witnessed in Asia this morning, it triggered what could only be described as a massive wave of selling pressure.
Wow.
Investors are clearly taking this threat very seriously and are adjusting their positions accordingly.
The image of a tsunami of sell orders
Yeah.
is quite apt in capturing the scale and the almost panicked nature of the market reaction.
Right.
When a major trading partner like China imposes such extensive and substantial tariffs,
Yeah.
the level of uncertainty it injects into the calculations of businesses and investors becomes immense.
Wow.
And this uncertainty, coupled with the potential for reduced profitability and disrupted supply chains
Right.
inevitably leads to precisely the kind of rapid and widespread disinvestment we observe.
And the repercussions aren't confined to just the financial markets either.
No, not at all.
We're seeing a global scrambling to react.
Right.
Consider Israel, for instance.
Okay.
Prime Minister Netanyahu is reportedly heading to meet with President Trump due to the imposition of a new 17% tariff.
Wow.
You can only imagine the level of concern driving such an urgent trip. Then you have voices like Keir Starmer in the UK, who has written a rather somber piece suggesting a fundamental shift in the global order.
Right.
It really paints a picture of widespread unease.
Yeah.
Even countries heavily reliant on exports to the U.S., like Vietnam, are apparently making urgent appeals for delays on significant tariffs.
I see.
We're talking about a potential 46% levy.
These individual high-level reactions underscore the deeply interconnected nature of the modern global economy.
Yeah.
And the far-reaching consequences that trade disputes of this magnitude can generate.
Wow.
A 17% tariff can significantly strain even close diplomatic relationships.
Yeah.
And a potential 46% tariff could have devastating consequences for economies heavily reliant on manufacturing and export.
Right.
The fact that these leaders are taking such immediate and public steps highlights the gravity of the situation and the potential for significant economic disruption.
And this is where we start to see some differing perspectives emerging on who will ultimately bear the brunt of these tariffs.
No.
Kevin Hassett from the White House National Economic Council has suggested that other countries will absorb a significant portion of these costs.
Okay.
And that American consumers won't feel much of an impact.
Interesting.
However, a closer look at basic economics suggests this might be an oversimplification.
Mm-hmm.
Let's take something as commonplace as your morning coffee.
Okay.
If tariffs are imposed on imported coffee beans, it's highly likely that those increased costs will eventually be passed on to you, the consumer, in the form of higher prices
Right.
at the cafe or the grocery store.
That's a fundamental point. While the initial legal obligation to pay the tariff falls on the importing company, those added costs rarely remain isolated.
Right.
They're typically factored into the pricing of goods as they move through the supply chain,
Uh-huh.
ultimately increasing the price that the end consumer pays.
Yeah.
The notion that other countries will simply absorb these costs without any effect on domestic consumers often overlooks the basic mechanisms of how markets function.
These costs tend to be distributed, and consumers frequently bear a significant portion of the burden.
And the level of uncertainty surrounding future developments just seems incredibly high at the moment.
Yeah.
Treasury Secretary Scott Bessent's recent comments essentially stating that the decision on whether or not negotiations will occur rests entirely with President Trump
Okay.
didn't exactly inspire confidence. He used the phrase maximum leverage to describe the current situation.
Right.
But that leverage appears to be coming at a considerable cost,
Yeah.
evidenced by significant market downturns globally, including a nearly 7% drop in Saudi Arabia's stock market.
Wow.
That level of volatility doesn't suggest a stable or predictable environment.
The concept of maximum leverage in this context is certainly a subject of debate.
Right.
While tariffs can theoretically be used as a tool to gain an advantage in trade negotiations,
Yeah.
the substantial market volatility and negative economic sentiment they generate
Right.
suggest that they also carry significant risks.
The sharp decline in Saudi Arabia's bourse, for instance, underscores that the negative repercussions of these trade actions are not limited to just the U.S. and China.
Right.
They are being felt across the global economic landscape.
But on the other hand, we have voices like Peter Navarro who are offering a much more optimistic outlook.
Interesting.
He's essentially telling investors not to be overly concerned,
Okay.
arguing that losses only materialize if they actually sell their stock holdings.
Okay.
While technically true in a very narrow sense, this perspective doesn't really address the underlying anxiety and the potential for long-term economic damage that these significant market fluctuations can cause.
Sure.
He's even gone as far as to predict a biggest boom in the stock market as a result of these policies.
Wow.
That's a rather bold forecast given the current market realities.
Mr. Navarro's viewpoint highlights the significant divergence in economic perspectives surrounding these trade policies. While his optimism may be rooted in a belief that these measures will ultimately lead to more favorable trade agreements and subsequent economic gains,
Right.
it's crucial to acknowledge the immediate and substantial financial losses
Yeah.
that investors are currently experiencing.
Right.
Larry Summers' more cautious assessment, warning of continued turbulence, appears to align more closely with the prevailing market sentiment and the immediate economic data we're observing.
Interestingly, amidst this global trade storm, Russia appears to be an outlier.
Okay.
They seem to be avoiding these new tariffs, perhaps due to ongoing discussions regarding Ukraine,
Right.
or possibly because existing sanctions have already significantly reduced the volume of trade between the U.S. and Russia.
Yeah.
It's a curious exception in this widespread imposition of new trade barriers.
The situation with Russia really underscores the complex interplay of trade policy, geopolitical considerations, and existing international agreements. Their apparent exemption from these new tariffs suggests that trade decisions are frequently shaped by a multitude of factors that extend beyond purely economic considerations.
Right.
It highlights the intricate web of international relations that underlies global commerce.
And finally, we have President Trump's unwavering conviction on this matter.
Okay.
He's taken to Truth Social to declare how beautiful tariffs are for the United States, even against the backdrop of trillions of dollars in potential losses for American companies, and widespread concerns among economists about the increased costs that everyday consumers are likely to face.
Interesting.
It's a rather stark contrast between the rhetoric being used and the potential economic realities that many are anticipating.
This disconnect between the stated benefits of the tariffs and the potential negative economic consequences is a central point of contention among economists and policymakers. While proponents often argue that tariffs can protect domestic industries, encourage domestic production, and improve trade balances, critics frequently point to the historical evidence, suggesting that they lead to increased costs for consumers, retaliatory measures from other countries, and ultimately a drag on overall economic growth.
Yeah, so there we have it.
Yeah.
Markets in turmoil, global leaders scrambling to react, and a wide spectrum of opinions on what it all signifies and where we might be headed.
Yeah.
Given this volatility and the diverse range of reactions we're seeing, from dramatic market crashes to urgent diplomatic meetings and starkly contrasting economic predictions, what single factor do you believe will ultimately determine the outcome of this escalating trade war?
That's a tough question.
And looking beyond just the immediate financial implications, what broader shifts might this trigger in the way the global economy operates in the years to come?
Well, I think one thing we can be sure of is that there's a lot of uncertainty ahead. But I think the real question is, how will these policies impact the lives of everyday people? Will they lead to higher prices for consumers? Will they lead to job losses? Will they ultimately make the global economy more or less stable?
Those are all great questions.
Yeah, and I think only time will tell. But it's definitely something that we need to be paying attention to.
Absolutely.
And thinking about how it's going to affect our lives.